Inflation may no longer dominate the headlines, but its impact hasn't disappeared. In fact, the real crisis is only beginning. While politicians celebrate cooling inflation, families are still struggling. Groceries cost more, rent is rising, insurance is skyrocketing, utilities keep climbing, and the paycheck that covered everything 2 years ago barely stretches to the 25th of the month. Why? Because we're entering inflation's second wave, a hidden crisis that hits harder, lasts longer, and affects more people than the first wave ever did. This isn't about numbers on a government report. This is about real life, real people, real pressure. And today, we're going to expose what's really happening behind the scenes and how to protect yourself before the second wave reshapes the entire economy. Welcome to Mind Over Markets, where clarity meets a changing economy. If you watch the news, scroll social media, or listen to politicians, you often hear inflation is cooling, prices are stabilizing, the economy is strong again. But here's the truth: inflation going down does not mean prices are going down. It means prices are rising more slowly, but they are still rising. Let's break it down. If your rent went up 10% last year and goes up another 5% this year, that isn't relief, that's a double hit. Or, gas used to be $2.20, then jumps to $3.80, then rises slowly to $4. The government celebrates cooling inflation because the increase was smaller, but you still pay more. People feel this disconnect deeply. The economy looks good on paper, but it feels bad in reality. And this gap is fueling frustration, anxiety, and a sense of economic betrayal. But the real reason inflation feels worse now is because we've entered a new stage, one almost no one is prepared for. Inflation's first wave was obvious: supply chain problems, stimulus checks, money printing, pandemic disruptions, surging demand. Everyone saw it, everyone felt it. But the second wave is different. It's quieter, slower, more permanent, and more structural. While the first wave was triggered by crisis, the second wave is fueled by economic fundamentals. 1. Labor shortages. 2. Housing scarcity. 3. Energy instability. 4. Rising corporate costs. 5. Aging populations. 6. Global fragmentation. 7. Higher long-term interest rates. These forces keep prices high even after supply chains recover. The second wave is like a long shadow. It won't be dramatic, but it will be persistent. And because it's structural, it's far more damaging to the middle class. But the question is, why is everything still getting more expensive? Let's break it down. The second wave of inflation has 5 structural drivers, each one powerful on its own. Together, they reshape the entire cost of living. 1. Housing costs are locked in at higher levels. Even if home prices stop rising, the damage is done. Mortgage rates doubled, rent skyrocketed, construction slowed, owners refuse to sell. Demand far outstrips supply. Housing is the single largest expense for most families. When it rises, everything feels harder. This is the number one driver of the second inflation wave. 2. Labor costs are permanently higher. Workers are demanding higher pay because living costs rose, and when businesses pay more, they pass the cost to customers. And once wages rise, they almost never fall. This creates sticky inflation, the kind that doesn't go away. 3. Energy prices affect everything. Energy drives up transportation, shipping, manufacturing, food production, home heating, and electricity. When energy prices rise, everything becomes more expensive. And because of geopolitics and underinvestment, energy remains unstable. 4. Insurance costs are exploding. This is one of the quietest inflation drivers: home insurance, auto, health insurance, and business insurance. In many places, insurance has risen faster than housing. Why? Natural disasters, reinsurance costs, labor costs, higher claim frequency, more expensive repairs. You can't opt out of insurance, so families are stuck paying more. 5. Global manufacturing is splitting apart. The world is deglobalizing. More production is moving out of China. Supply chains are being rebuilt. Countries are prioritizing national security over cheap prices. This is good long term, but expensive short term because prices rise as the world restructures. Inflation. Part 1 hurt. Inflation Part 2 will break people. Why? The first wave drained savings. People had stimulus money, they had pandemic savings, they had low debt, but now that buffer is gone. The first wave pushed people into more debt. Credit card balances soared, auto loans soared, buy now, pay later exploded. The second wave will hit people already financially fragile, and wages didn't catch up. Even after pay raises, inflation erased most gains. This keeps the middle class running in place. Because essential services rose faster than wages food, housing, insurance, utilities families can't cut back on these. Because mental stress creates real financial stress. Constant anxiety leads to emotional spending, burnout, reduced productivity, financial mistakes, and higher health expenses. Inflation attacks the mind before it attacks the wallet. Inflation's second wave hits harder because people no longer have room to absorb rising costs, and the economy is feeling the pressure too. Inflation doesn't just raise prices, it reshapes everything around it. Here's how. 1. High interest rates become the new normal. The Fed isn't cutting back to zero. Ever. This means loans remain expensive, mortgages remain high, business growth slows, and debt becomes heavier. Inflation changed interest rates permanently. 2. The middle class shrinks faster. Inflation doesn't hit everyone equally. High earners absorb it. Investors outpace it. The poor already struggle, and the middle gets crushed. The second wave accelerates the hollowing of the middle. 3. Consumer behavior changes. People downgrade brands, vacations, cars, housing, entertainment. This forces businesses to restructure completely. 4. Businesses become smaller and leaner. Inflation forces companies to cut staff, automate, outsource, or close locations. This accelerates job polarization. Low wage jobs, high skill jobs, or nothing in between. 5. Recession risk increases. The second wave pushes the economy toward contraction because spending falls, defaults rise, borrowing drops, confidence weakens, and savings run out. A slowdown is almost inevitable, but inflation doesn't just destroy wealth, it redistributes it. Here's who loses and who gains. Losers. 1. Wage workers. Income rises slower than the cost of living. 2. Renters. Rent rises while savings fall. 3. High interest borrowers. Debt becomes unmanageable. 4. Families with children. Their biggest expenses rise the fastest. And 5. Small businesses. Costs rise faster than revenue. Winners. 1. Homeowners with fixed mortgages. Inflation eats away the real value of their debt. 2. Investors in productive assets. Stocks. Real estate dividend paying companies. High yield instruments. 3. Businesses with pricing power. Companies that can raise prices without losing customers. 4. Savers in high yield accounts. Finally, cash earns real returns. 5. Individuals with high value skills. They can raise their prices to match inflation. Inflation's second wave creates a new divide. Those who adapt rise and those who don't fall behind. Before inflation becomes severe again, it leaves clues. Here's what to watch. 1. Rising delinquencies. Credit card, auto, personal loans, small business loans. Delinquencies equals stress. 2. Rent rising faster than wages. This is a flashing red signal for economic instability. 3. Insurance increases outpacing everything. When insurance spikes, the economy is under pressure. 4. Low consumer confidence. People spend less when they're scared. 5. Weak business expansion. When companies stop investing, recessions follow. 6. Persistent energy price volatility. Energy spikes precede economic downturns. 7. Governments downplaying problems. When leaders say economy is strong, but people feel the opposite. The second wave is already here. Here is your clear, actionable strategy to stay ahead. Step 1: prioritize cash flow, not just savings. Secure, steady income, supplemental income, and multiple income streams. Cash flow beats cost rises. Step 2: destroy high interest debt. This is your number one priority. Inflation punishes borrowers. Step 3: strengthen your skills. Focus on skills that give pricing power. Tech, AI tools, consulting, finance, marketing, data analysis. Step 4: build a cash cushion. The second wave is unpredictable. Savings equals protection plus opportunity. Step 5: invest smart, not emotional. Look for undervalued sectors, dividend stocks, inflation resistant sectors, and more long term opportunities. Step 6: reevaluate housing decisions. Buy only if the math works, rent only if it gives flexibility. Don't follow emotion, follow numbers. Step 7: reduce lifestyle inflation. Don't let rising income become rising expenses. This is how you get trapped. Inflation's first wave shocked the world. The second wave will reshape it. It's quieter, more structural, more permanent, and more personal. But it's not something to fear. It's something to understand and prepare for. The people who survive the second wave will be fine. The people who adapt will thrive. The people who ignore it will fall behind permanently. Stay informed, stay strategic, stay ahead.